Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, I'm going to talk about why, for a lot of you, if you did try to explain velocity banking to people that you knew, they were probably confused. So I recently did a poll that asked, have you tried to explain velocity banking to your personal network, friends, family, etc.? It could have been coworkers as well. 37 people voted. And the vast majority of the people answered yes, and they were confused. Pay off 6% loan with the 50% line. And a good number of you did not try to explain it to your personal network, friends, and family. And the least amount of people responded yes, and they were blown away. And I know that a lot of you who watch this channel are blown away by the concept of velocity banking. And I'm going to kind of give you my own personal experiences. I first learned about the strategy in 2017, and at that time, I was only making about $20,000 a year. So there was no way at that time I could really get credit because I had too little income for credit and to get credit. And there's no way at the income I was ever gonna buy a mortgage or get a mortgage to buy a house, right? So I knew about the concept. It was kind of theoretical in my head, but I didn't have a chance to apply it. And so when I try to, explain this concept to people that I knew, maybe people who owned a home, they just kind of brushed me off and they were just like confused, like, wait a minute, this is a 4% mortgage. Why would you pay it off with the 15 or 10% line of credit? And because at that time, I was such at a low point, I didn't really know how to counter that, right? But because now I'm at a point where I did apply the strategy, I kind of know the ins and outs of it, and I was able to pay off 25% of my mortgage in a year. I realized the strategy is like really easy, and it's almost a set it and forget it strategy if you know what you're doing, right? So I'm just going to kind of go over a list of reasons that are kind of what I went through that are probably similar to what some of you who answered in this 51% crowd of why when you try to explain it to the people that you knew, they were confused. And I'm just going to go over one by one. So, first one is that you're trying to explain too much at once, right? So explaining too much at once, that's a very big I don't want to say sin, but a lot of people so we actually provide an 8-hour course on velocity banking, and I know I do kind of throw out little pieces here and there. I make the same video over and over again, but there's a lot to it rather than just, oh, dump, you know, your line of credit into a loan and pay it off, right? And so what happens is that a lot of people, they have no idea, like, why would they see numbers like, oh, 3% and 6%, that makes no sense, right? And so you have to kind of give them little bits and itty bitty bits of the concept and not try to explain the whole thing at once. In fact, I mentored a college student. She was in her first year of college, and I showed her the velocity banking concept, but she said, "Oh, I want to present this to my college class, right?" And I said, "Don't do that because when people see you're going to pay, let's say, a 3% mortgage with, let's say, a 15% line of credit, they're going to be confused, right? Just explain to them how a mortgage works. Gain their credibility and trust and show them how a mortgage works." And then she followed my advice, and the crowd, her audience loved it because her audience did not know that a 3% mortgage is a 50% loan or interest loan, right? A 6% mortgage is essentially 100% interest loan, and a 9% mortgage, and I'm kind of simplifying it, is almost a 200% interest loan, right? So what I said is that you want to build a bridge with your audience, and you don't want to explain too much because what you want to do is just give them some credibility, give you some credibility by introducing things that they cannot dispute, right? And so I just told her, just show your audience how a mortgage works, right? And then if you ever get to a part two, then show them about the velocity banking, okay? But there's a lot of concepts to it. So, I mean, I could just go over a few things like segregation of income, people living paycheck to paycheck, people overpaying for homes, people not understanding how much interest that they pay for a home. In fact, when I want to talk, when I talk to people one on one, I actually don't try to talk about the velocity banking concept first. I just ask them, hey, like, do you know how a mortgage works? Has anyone ever shown you how a mortgage works? And then, I just kind of just do the math with them and I show them, oh, okay. Well, I mean, in this situation, who would you rather be, the borrower or the lender? And at the end, they always say lender because when they say that even a 3% mortgage is like a 50% return for the bank, that's a light bulb moment that they never had because no one else ever explained to them. And I've done this with people who are younger than me and older than me, and they just never knew, right? So the first issue as to probably why the people you explain to are confused is that you're trying to explain way too much at once, right? Just go little by little. Like the first, if I'm meeting someone for the first time, I'm just to say, hey, do you know how a mortgage works, right? I'm not going to even explain the velocity banking concept, right? And then once they understand what the problem is with the mortgage or the loans or people living paycheck to paycheck, is like, okay, well, let me show you an easy solution to pay this off, right? And then you come up with the velocity banking concept. You have to show them the problem first because most people don't even realize that there's a problem, right? I had no idea how mortgages work before I took the velocity banking course. And that was more of a boom moment, like this insightful moment for me of knowing how a mortgage works before I understood the importance of the velocity banking concept. But the first thing is that you explain too much at once, right? So the second thing, and this is kind of related, is not giving enough context. So human beings in general, we're fooled by marketing and numbers, right? So if you need to explain more of the context, and maybe this should be like 1A. So this would be like 1A or something like that. I'll put a tab here. But you need to give more context to what you're talking about, right? So the fact that how can a 15% line of credit be able to pay off a 6% loan? And then you just explain like, hey, look at how much cash flow is freed up when you're paying off this loan and moving it to the line of credit. Or talk about the paycheck to paycheck situation, which is what I love talking about. Shout out to Fantastic for popularizing that. I think that was like one of our most popular videos. But when I saw that, I was like, wow, that's a great bridge to understand about creating cash flow out of thin air, right? And understanding like why it's important to have your line of credit when you have debt as your operating account rather than your paycheck, right? Because when you have your paycheck as your main operating account, then you're going to get engaged in segregation of income, and that's where the banks want you at, right? And again, we have an 8-hour course on this. So I took the course many times, and it took me about 8 months to figure out what was going on because I never had a line of credit before. Well, I actually had credit cards, but I never had like a personal line of credit or a HELOC, so I didn't know what it was like to kind of sometimes you gotta experience it to know how to explain it to other people. But so I took the course many times, and B, I never had a mortgage at that time either, right? So again, you got to kind of give the context. You don't explain too much at once. You just do little by little, like I'm kind of doing. I know I do it kind of quickly too, but don't give an info dump and don't try to impress too much on other people. And sometimes people just don't know what the problem is, right? Unless, they understand. Sometimes they understand, but they kind of give them a say that, well, that's just the way it is, right? In fact, I had one person I talked to where I showed them the amount of interest that they would pay on a mortgage, and they kind of already knew that, and they're just like, yeah, well, that's just life, right? I've heard that before. But again, don't try to explain too much. So let me go back to the second explanation, and I'll put this number 3, is that you have no authority in the eyes of your hometown. So this is more for people who try to explain this to people who you've grown up with. So there's a saying that people do not people ignore the prophet in their backyard, right? So prophets are adored everywhere except in their hometown, and this is just a phenomena as old as time. So for number two, I suggest not to explain it to people that you've grown up with, friends, family members, et cetera, even coworkers, because you have no authority in their eyes. So the best way to explain it is either to get an audience is probably just through social media, like I'm doing right now, right? In my real life, I rarely talk about velocity banking. Sometimes I'll just drop a hint there too, like, oh, I paid off 25% of my mortgage in a year. And then, I'll look at the blank stares because that's how people are, because they don't think it's possible. But just in general, and this is I live in the same earth as you, so I do not have authority in the eyes of my hometown, right? I just don't. But why do I have a YouTube audience? Because you are not my hometown. That's just how life works, right? Number three is somewhat similar, but basically you can't give your own personal testimony because you don't either. Maybe you learned it, but you were like me, where I was making only $20,000 a year at the time when I did learn it in 2017, and I just didn't make enough money to use a line of credit. Like I think I only had like a $500 credit card at the time, and I certainly couldn't get a mortgage. And so someone who you're talking to who does have enough money to make a mortgage might be thinking, well, why am I taking advice from this guy? You don't even have a mortgage. And that's how people are sometimes, right? And that's an unfortunate fact of life. Now, there's kind of like you could do a fake it till you make component. Now, I'm always honest with people. So if I talk about the concept and let's say I never bought a home or I didn't even make money, I would just, be honest with other people, say, hey, I don't make enough money, or I'm getting to a point where I want to make enough money, but I know that when I buy a home, this is what I have to do in order for me to pay off the mortgage quickly or pay off my debts quickly, right? So that's why, sometimes people will dismiss you just because you don't have your own personal testimony. And that's why even though I learned in 2017, it's like 2023 right now. I'm only explaining 6 years after I learned the concept. 6 years. So if you learned the concept like 2 months ago and you're trying to explain it to your friends or family members or whoever that you know, and you don't have a personal testimony, sometimes people put that as a strike against you. But don't worry about it. If you put some investment and time and learn the concept, it'll at least pay off for you, right? Like it did for me. Again, 25% of my mortgage, 2021. That's when I got the house, right? After 1 year, I paid 25% of the mortgage. I paid $55,000 in credit card debt this year, and I have two mortgages, right? So the strategy is working for me. It is. But again, sometimes it's hard when you don't have your own personal testimony. But these are, I think, the main three reasons. When I learned it in 2017, I just didn't. I was just getting these weird stares and confusion, right? 6% loan. Why would you pay it off with the 15% line of credit? That makes no sense, right? And it doesn't make any sense. But when you talk about in the context of cash flow, like look how much cash flow you get back and how you're able to maintain control and liquidity of your money when you do it this way, right? And look at all these debts that we have. Look at the concept of segregation of income. Look at the six-figure earner who's living paycheck to paycheck. So, after a certain point, more money doesn't mean that you'll be better off. Then they'll be able to understand the concept. And again, I personally do not try to explain this too much to people in my hometown because they certainly don't care or understand because A, you have no authority in eyes of your hometown, and B, you know, um, I'm more willing to explain to people who are watching this YouTube channel. And that's why I think if you want to explain to other people, just start your own YouTube channel or social media. You'll get good if you practice over and over again. Okay. All right, so this is Korean Atlanta Mentorship. If you're interested in joining our group, go ahead and click the Google form link below. And also, if you're interested in joining our YouTube channel as a member, it's only 99 cents a month. And there's a join button on YouTube, and you get access to exclusive emojis and exclusive access to, I'm going to say exclusive again, I'm going to say that 5 times, to a YouTube live stream once a month. So I talk about whatever, but mostly we'll talk about velocity banking and go over some numbers. All right. Have a great day, everybody, and we will speak next time.